Welcome everybody, my name's Jake. I'm going to be walking us through StratGeeks ORS opening range system strategy, the theory behind it, and a couple settings. I'm going to see if I can keep this video under 10 minutes. We'll see what happens because I'm not going to do any editing. Anyway, welcome and let's go. So here we go. We got the NASDAQ 3-minute chart. This is micros actually, MNQ contract 624. So what is ORS? ORS is the opening range system. So primarily everything's based off the opening range. That's the first 15 minutes of the market. So from 9:30 a.m. Eastern Standard Time to 9:45 Eastern Standard Time, we are looking for the forecast, if you will, of support and resistance for the rest of the trading day. So in this case, the high to the low of the opening range is about 378 ticks. I could have that wrong. It might be 375, but we'll call it 378 for now. And then we basically just split this high and low of the opening range into 4 equal sections. And we call these sections standard deviations. 1, 2, 3, and 4. So we got 4 standard deviations from the high to the low. And then all we do is we just extrapolate those up and extrapolate those down. And those are going to be our targets, more or less our targets, and more or less our stops for the whole trading day. These green and red shaded sections vertically on the chart are buy and sell zones. And those are plotted on the chart via our strategy, the ORS strategy, and that's proprietary buy and sell zone signals. So, but just to walk you through how, oh man, just like I've been obsessed with this opening range theory. I haven't heard it anywhere else. As far as I'm concerned, it's proprietary from my brain, the extrapolating up and down, but I highly doubt that it actually is because of how well these support and resistance levels tend to work. I mean, if we just zoom out, we can see comes down, hits the middle, gets rejected here, comes down 2 standard deviations, then it comes up here, consolidates right before it tries to make its break for the middle. There it is, it breaks for the middle here, comes up, almost hits the top, then just careens down. But then you can see it consolidates here. Big consolidation here in this standard deviation. And then this darker shaded red here, that's when we're not going to trade. And then this darker shaded region over here is when we're not going to trade. This particular template that we have loaded for the strategy only trades opening range days with a span between 276 ticks and 375 ticks. So let's see. Okay, so we must be at 375, otherwise that wouldn't have showed the trades here. So if we just clear these out, I can give you a basic idea on how this strategy works as far as placing the limit orders goes. So let's zoom back in. So we're not going to take any longs in this area because we're below our moving average. We are in a buy zone, but we can't do anything. Here we're in a sell zone, and we're close below our moving average, and the moving average is blue. So we have to be close below the moving average, and the moving average has to be blue, and we have to be in a red shaded area to be able to take shorts. So here, this candle closes right there. So what we're going to do is we're going to look for a pullback to the standard deviation line right above where that candle closed, and that's going to be here. So basically here to here, and our limit order would be placed right here, and our target is going to be whatever percentage the user wants of one standard deviation. I've found that 75% of a standard deviation is a great target. I've messed around with full, I've messed around with 2 standard deviations. You can try 3. I'm really excited to see what our team is going to come up with here for settings. Hopefully they can beat mine. I'm sure they will. So, but in this case, we have a 75% target, and if we just turn on what the back-tested plot would be, we can see that we did enter here and that we hit our 75% target here. Then the strategy wants to take another trade. So in this case, it's looking for a pullback from this close here to this standard deviation line, and instead of going the direction that we want, it just careens right back up, blasts right up through the opening range. And this particular template has a stop set of 2 standard deviations, so that's going to be a stop here, and our stop gets hit right about here, it looks like. Yep, and that's fine. And then we have a really cool martingale system to be able to make up for this loss. Because as you can see, the loss is 2 standard deviations, but the target's only 75% of 1 standard deviation. So one might ask, well, that's an inverted risk reward. What are we going to do about that? Well, we have a very unique martingale system. It's not one of those martingale systems that just double down and double down and double down and double down. We have a contract limit set for how high the contracts are able to go to make up for that previous loss. So if we go in and we look at our strategy, this is for our bigger opening range days. We can see that our opening range minimum ticks for this template is 276 and our maximum is 375. So we might be right at that 375. I probably just wasn't that accurate in measuring it. But we can see up here for the position size, our initial position size is going to be 5 micros, but we're not allowed to trade more than 15. So when the martingale system is initiated after a loss, we're not allowed, the strategy is not allowed to trade more than 15 micros, which really is not that bad. And it will just stay at 15 until the loss is made up for, or if you get a win that's not quite making up for the loss, and that gets into the intricacies of how we can close out some of those higher contract, 15 contract trades early based on a close above or below the moving average. But that would be for another video. Or for the 30-minute one-on-one meeting that I'm offering all of our brand new team members, customers who get on board with us in the first month or 2, or however long I can take it, basically, however long I can do 30-minute meetings with brand new customers. But we do want a personal relationship, especially with our first customers. So bring it on. Let's do it. Let's have some meetings. Okay, so this initial trade here was 5 contracts, right? So to make up for that, we're going to need 15 contracts. So we had a 5 contract winner, then we had a 5 contract loser that was 2 standard deviations. So something about the 74%, or however I have the percentage, it's not taking a full 15 here, it's taking 14. But basically what we want to do is we want to make up for this loss with 1 trade. And that's what this does. So 5 times 3 is 15. It's making it 14 here for some reason, because of it's the 74%. I think I have this set at for targets. But we can see that this trade makes up for this trade, which is pretty awesome. And then we go right back to regular 5 contract trades. So here we have a close below the moving average. So we pulled, and we're in a sell zone. We pull back and we hit target. We have a close below the moving average, obviously. We're in a sell zone again. It's going to take another trade, pulls back, and it's not going to close a trade just because we get into a green zone. It's going to finish that trade out at 75% of target. So that's basically the idea. Oh my goodness, look at that. And I am still under 10 minutes. So my name is Jake at ORS. And once again, it's StratGeeks.com. Pretty awesome domain name that we were able to snag there, StratGeeks.com. Join up, buy up, 7-day trial. Will all be explained to you on the product page. This isn't really a selling video. This is just a basic overview video of what the strategy is about. And I think that's basically it. I mean, otherwise we could spend another 20 minutes going through all these awesome settings. But I will spend, let's do a minute. We can do 11 minutes. Come on. It's fine. Let's see. So we'll go to the template that's actually on the chart right now. So we got a position size of 5, maximum that we're allowed to take as 15, and you got all sorts of different options here as far as moving averages. Actually, you know what? Let's go here. So this way we can got all sorts of different moving averages, HMAs, SMAs, even a T3. But our proprietary buy sell windows, the green and red, that's the T speed, W speed, action, S, and A level. So that's for time, weight, action, support, altitude. So right now the 101 is maxed out. And then we can also include specific times. This specific strategy only trades from 1:30 to 3 o'clock. And when I said strategy, I meant template. So this template trades for under 2 hours, hour and a half. Pretty cool. We're getting some really good results on that. This is where you say how big of a stop loss you want, what your profit is, and what you want your martingale SD offset to be. And then if you want your martingale trades to close after they close on the other side of the moving average and how often. So this is some really cool stuff that we can get into when you set up the meeting, purchase a strategy. Yeah, really cool stuff. And there's also this moving average cloud settings where you can set up 4 different moving averages and only go long if all 4 are crossed up or all 4 are crossed down. So that's a pretty hardcore filter here. And we're always working on more stuff to add. So yeah, again, my name's Jake at Strat Geeks. Give us a holler and we'll get you set up. Thanks so much. Signing out.